Studio by Dr. Kenneth Creamer from the Wits School of Economics and Finance. A very good morning to you, Dr. Creamer. Can you please tell us a little bit about what Lesetja Kganyago said? What did he mean when he said the rand is undervalued and that the Big Mac's index comes in to help illustrate that? Can you unpack that for us, please?
Yes, I suppose we should look at mathematically what did he mean, and then from a policy perspective, what is he talking about? So, mathematically, the Big Mac index is a very well-known index developed by The Economist magazine in the UK many years ago. And there's a lot of economic assumptions behind it. It basically says that if the price, and I looked it up earlier, the price of a Big Mac in South Africa without chips is around 40 Rand.
Yeah.
And in New York, without chips, it's around $5.
Right.
These are identical products. If you assume there's trade and there's free trade, there's no barriers, they should have an identical price by the law of one price in economics. So you take 40 divided by 5, and you get $8. So by the Big Mac index, South Africa should cost 8 Rand per dollar. So 8 Rand per dollar. But in fact, it costs 17 Rand 30 per dollar.
So sometimes 18 Rand.
And sometimes 18 Rand. So that's where the governor starts off. It's a starting point. It's not realistic. Everyone understands it's just an indicator, because in the real world, there's so many other factors that influence the value of the Rand.
Okay, so with that said, I mean, the impact of the rand's current level on inflation, trade, job creation, what is the impact of that seemingly unworkable formula? If it really should be at about 1 to 8, and actually sitting at 1 to 17, 1 to 18, sometimes, God forbid, 1 to 19, what does that mean?
It means that there's many other factors other than the Big Mac index that are influencing the value of the Rand. So it's about supply and demand for the Rand. So if there's a lot of demand for the South African Rand, then the Rand will tend to get stronger and go closer to that Big Mac prediction. For example, if people are buying South African goods from overseas, minerals, etc. If there's no demand for South African rands, investors in South Africa want to get out, no foreign investors coming in, the rand will tend to get weaker. Right. And those are the realistic forces that are at play, that are influencing the level of the rand. And then you ask, well, what is the implications of that? You know, so in the textbook, they'll tell you that if the rand is weaker, then South African goods should be cheaper for foreigners. So foreigners visiting the country would pay less for things. We would be able to export more, and that should be good for growth. It should be good for jobs. On the other hand, if the rand is stronger, then it could be good for importers. But Mr. Kganyago, Governor Kganyago, I was at the speech that he gave at the Drakensberg where he said this.
Yes.
He made it clear that that is too simplistic a view as well, because sometimes you need to import goods in order to manufacture, in order to get solar panels or to get turbines, whatever, and that's necessary for the good performance of the economy as well.
I must say that off late, Governor Kganyago seems to be making pronouncements or statements that seem to signal something to markets, or sometimes they seem to be just an observation. Which of the two would you say it is, or is it a mix of both? Signaling as well as his own observation with his board and committees that he works with?
Yes, look, he's got a very responsible position in South Africa. He has to manage the value of the currency as mandated by the Constitution to protect the value of the currency in the interest of growth and employment. And I think that he is signaling, consciously signaling, and he's saying we could enter a phase whereby the rand, he called it a more mature phase. Because if your inflation rate is higher than your trading partners, you will tend to have an ongoing devaluation of your currency in order to compensate for that. So he's saying if we enter a phase where we control our inflation, he's targeting 3% rather than the range of around 4.5%, between 3 and 6. He's indicating that we could enter a more mature phase where the rand will not be constantly depreciating, devaluing, and will be less volatile. And that is what he's trying to say, that we can achieve that new phase 35 years into democracy, or 30 years into democracy, where we have a new understanding of the role of the rand.
Let's see if we can connect dots here to a maybe slightly broader picture. South Africa has been removed from the FATF's grey list, and it's a reputational boost of note. Could that narrow the gap between the rand's market value and what Lesetja Kganyago has said is actually its real fair value?
Yes, so for the last 15 years or so, the rand has generally been volatile and has been depreciating, and it's had a number of shocks that come along the way: load shedding, corruption, And then, in addition to that, there was the downgrade by the rating agencies of South Africa as sub-investment grade. And then on top of that, we were grey listed to say that they don't really trust the way we're managing our criminal justice system, our financial intelligence system. It's not trustworthy, it's being abused by criminals, and therefore we're on the grey list. For a couple of years now, the Minister of Finance and his team have been working extremely hard to get South Africa off that grey list. And we got the good news last night, I think it was, to say, well, yes, you and a number of other countries have achieved this breakthrough. You've done enough. You've done the 21 points that we told you to do, and you've addressed all of those points, and we trust that you can come off that grey list. In terms of the rand, exactly what you say, because now it's a more favorable destination. It's easier to invest in South Africa. You don't have to look at it quite as closely if you're a foreign investor, because you get the trust, the halo effect that this is a non-grey listed country. In the foreign exchange market, that will tend to strengthen the rand, because there's more demand for the currency as people come in, which will, as you say, begin to close that gap to the Big Mac index.
So it's about, in essence, it's about those 21 factors that were given to South Africa to address and come back favorably on. It's about South Africa looking like it's more stable. It's about South Africa looking like it's a more favorable environment for outsiders to invest in, because it takes care of things like corruption. It's got stable regulation, stable policies, as well as accountability when those things are not adhered to. So something like the Madlanga Commission, the Parliamentary Ad Hoc Committee on Mkwana's allegations, how does that feed into that particular space? Because everybody's watching.
Yeah, so one of the grey listing requirements was to know who is the beneficial owner of something. You know, with entities, suddenly you set up an entity, ABC. Who is ABC? Who's behind ABC? They required us to get into the detail of that, to know that the financial intelligence structures can know who they're dealing with, the banks can know who they're dealing with. It's very important that we do that. The startling problems that we have being revealed, it's actually too much to absorb quickly, but I'm sure the market will absorb over time. The revelations around the breakdowns in the policing, criminal justice system, I think it can go either way. If we just get left hanging with these startling revelations, that cannot really be good for South Africa's reputation and for the rand. If it gets resolved and we feel like there's some forward movement, this commission has achieved ABC, the following people have been held accountable, these are the consequences, this is how the police will now be run, this is how the prosecutors, magistrates, and the courts will be run, that will be a positive outcome. But I think we're very much in the balance right now.
No, fantastic. Dr. Kenneth Creamer, thank you so much for that. As you can hear, the value of the rand is not only about currency. It's about confidence, credibility in the economy itself, as well as action when recommendations come out of these particular processes. That was Dr. Kenneth Creamer from the Wits School of Economics and Finance.